Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, December 28th, 2022. It is 5:05 p.m. Eastern Time, and I'm coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in a correction, and things got a little bit worse today. You can check over here at the trend gauge. No changes here, but we're heading on our medium term to go from neutral to bearish as we got one close on the Dow Jones Industrial Average below the 50-day moving average today. The Dow has been, and really still is, the leading index, but a close below the 50 is obviously not a good sign. Market leaders, 2 of the 21 on the 21 over 21 broke the 21. About 5 or 6 are sitting right on it. We're still neutral there with a red sub-hour arrow. Short term, all 5 of the major indexes below their declining 21-day moving average. I just talked about the medium term, 50-day, long term. Dow still above the 200-day moving average, but that's the only one. The rest of the indexes below their downtrending 200s. What happened today? Not a good day at all. We have been talking about how this 3,800 level was so key to holding up the S&P 500. It either touched it or undercut it 5 of the last 6 days. Today it broke it, tried to get back above it, failed, and then made a lower low. And that is a nail in the coffin for any attempted rally, especially any Santa Claus rally. So close below 3,800. And to add insult to injury, the NASDAQ 100 closes at 2022 bear market lows. Here are the numbers on the day. G6, this is our in-house 6 ETF composite of growth stocks, down 1.54%. S&P opened flat, was just like Monday night into Tuesday night into Wednesday, showed some strength overnight that faded into the close. We opened flat and then just had a bad day, down 1.2%. NASDAQ 100 down 1.3. Tesla finally with a green close today. Dow Jones down 1.1, mid caps down 1.7, Russell 2000 small caps down 1.6. Global diversified 60/40 stock and bond down 0.80%. In-house GROTECTION down 0.26% on the day. We'll go through the tail of the tape and our charts of interest / focus list as we dive forward into what's going on in the market. What do we do at Revere? For those unfamiliar, we are trend following active managers. SEC registered. Our flagship portfolio is named GROTECTION. It's designed to grow assets in an uptrend, protect them in a downtrend. We sure have been doing a lot of protecting this year. But when the market's healthy, trending above its moving averages, we'll be as long in the market, as involved in the market as we can comfortably be. If things start to roll over, our stops will take us out. If the slopes of the short and medium term moving averages start to roll over, we'll get even more defensive. And as you know, if we break this big black ominous 200-day moving average, this is when we get the heck out of the way because of these numbers here. If you have accumulated a nest egg, or you're approaching retirement, or both, the last thing you want to do is give up a third or a quarter or up to a half of what you've saved to the market because you had no sell discipline. That's what we specialize in here at Revere, protecting the downside, and then the upside takes care of itself, and you can capitalize from a much higher asset base than if you sat through big drawdowns like this, not to mention the mental capital and emotional capital that you've preserved. So we're back closed that 3,800 level. That was the minus 20% level with the close below it. We're now back below 20% drawdown year to date. Just it's time to play defense if you didn't get out before. And if you people will tell you it's too late to get out. It's not. It's never too late to sell if you have a plan to re-enter. We've proven over the long term that we can manage these downtrends and get back into the market when it's healthy. And if you're interested in this approach, give us a shout. Email me, don@revereasset.com, or my partner, Dan Stewart, dan@revereasset.com, or phone 855-REAL-WEALTH. That's 855-732-5700. 59.32. So here's your S&P 500. Let's go to a 15-minute chart here. You can see very clearly how 3,800 undercut here on the 19th, on the 20th, on the 22nd, on the 23rd, and now finally on the 28th, undercut, reclaimed, and then gave way again. The fact that it back tested and failed is bad because it means, okay, we tried to get back above it just the same way that we did all of these other instances. It only undercut it for a brief period of time, but this is an undercut or reclaim and then another fail again, making lower lows and lower highs into the close, closing near the low of the day. As I said, very bad, no good day in the S&P 500. Here's the daily chart. It's pretty clear there. Still didn't undercut the shakeout lows of 1222, but we did on the NASDAQ 100. You can see here where these are closing lows. And if you look at a weekly chart, these lows, these closing lows go all the way back to, wow, this is something, all the way back to 2020. So more than 2-year lows on the NASDAQ 100. That leaves me a little bit speechless, and it also drives home the point that there is no stock. We say this all the time, and it's one of the things we have to repeat over and over again to new clients coming in with legacy positions. There is no stock that is a hold forever stock. I talked about how Tesla hit 72% off of its highs yesterday, a little bit of a bounce today, but look at this rally, COVID. Oh yeah, we recovered from COVID. We're fine. Oh yeah, we'll go through a bear market. No, this is down 37% year to date. The Nasdaq 100, 37% compared to the Dow down 20%. Compare that to Revere down a little over 12%. Protecting capital, it's what we do, and it's very easy to get back to highs in a bull market when a healthy market returns, and it just hasn't returned. Every time we've approached this declining 200-day moving average, we failed and we've made lower lows. Now we've confirmed the lower lows on the Nasdaq. We haven't yet on the Dow. We haven't on the S&P. In fact, we're still above the 200-day moving average. Let's move on to the Dow now. This is the index we're long. We're accumulating shorts against it. This relative strength line is really telling me something. Still holding above the 200-day moving average, but 2 days in a row and 3 of the last 5 sessions, we could not get back above the 21, and now a close below the 50 today. You got to go all the way back to October to see a close below the 50-day moving average on the Dow. Next up is 1.3% below is the 200-day moving average on the Dow. MDY mid caps up next, not a closing low, but you can see the brick wall of resistance at the 450 area here, where all of these, the 21, the 200, and the 50-day, are all stacked up there. And IWM small caps, lower closing lows on this leg down since the FOMC bad news that was given. Certainly not lows relative to September, October, or June, but I think you get the drift about what's going on here. Equal weight Nasdaq's down about 27% year to date versus the Nasdaq and Nasdaq 100 that are down an additional 10%. RSP equal weight down worse than the S&P 500 today, down 1.44%. It's broken all of its moving averages also. Something to be very concerned about. I talked for a couple of weeks about how junk bonds weren't a concern. This is a serious breakdown below this 90 level and the 21 and 50-day moving averages. So for this, tried to lead stocks higher back on 12/13. Not a chance. Absolutely not only broke the uptrend line this 21-day, now that slope has rolled over, and this is a decisive break on above average volume during a light holiday session in junk bonds. This is another gigantic red flag for the market. Let's look at the 30-year yield TYX continues to climb off the lows, two closes above the 50-day moving average. Now it appears that this pullback was a pullback within a longer uptrend. We'll give it a couple more days to make that decision firmly. We haven't pulled back and tested the 50-day here yet, but you're seeing the same thing on the 10-year. This is rising interest rates. When the Fed reiterated they have no chance to pivot and said higher for longer 2 weeks ago, and the market is finally starting to agree with it. Here's a broad bond index, BND, sitting right on its 50-day moving average. How did the dollar do today? Dollar started out positive and then, or started out negative when stocks were break even, but trended higher pretty much all day and closed at the high of the day. You know, if the dollar's going higher, that is not good for stocks, and it's not good for commodities either. Here's gold lower on the day, not by much, down by less than 0.5% and still holding the 200-day moving average. But silver was hit harder, down 2.3%, and gold and silver stocks hit even worse. GDX down 3.1%. We're still holding 1% in NUGT Nugget and are a little bit below break even on that position now. Did I cover everything? Yes, I believe I no, I didn't. I didn't touch on the VIX. The VIX not up much at all today, down 2.5 or up 2.5%, reclaiming the 21-day moving average. This 21 now is kind of flattening out, won't provide support or resistance. Flat moving averages are notoriously weak, but this 20 level, this looks like it wants to go higher. The VIX wants to go higher. The VIX goes higher. The market's going lower. And like I said, the dollar may be also trying to reignite itself. This is a 2-week closing high, 1.5-week closing high on the dollar. See what happens when it runs into the downtrending 21-day exponential moving average, which has contained this move down for 6 weeks. So those are the major indexes. Let's go into the tail of the tape now. When you look at this picture, and I explain to you, this is a put call ratio right from the CBOE stats, jumped from 1 at noon central today to 1.45 at 12:30 to 2.03 at 1 o'clock. This is broken and we're not going to track it anymore. We closed at 1.95. These zero dated options, short-term options have broken this as being a useful tool. We're not going to quote it anymore. We're going to look for additional sentiment indicators to talk about, but you won't see the put call on here anymore. So the VIX at 22, as I said, up 2.3% today. Fear and greed dropped 7 to 31. It's approaching extreme fear. We're operating under the bear case. A little bit of news, pending home sales fell for the sixth straight month, down 4% month over month and down 37.8% year over year. Day count goes from up 1 with a consolidation day to down 1. NASDAQ 100, as I said, logs bear market low close, down 34.7% year to date. Expectations were neutral coming into today between the negativity of being below the moving averages and the positivity of the Santa Claus rally. That's a big negative now, close below 3,800. We reclaim it tomorrow. Maybe we do get a couple days of a rally, but I think the junk bond breakdown is telling us something loud and clear. S&P 500, we broke 3,800, as I said, 259 to 260. We're sitting right on that on the NASDAQ. Sectors that were up today, DBA, which is agricultural commodities, and XBI, which is broad biotech. That's it. 11 out of 11 down. A little bit of relative strength shown by XLV Healthcare and XLF Financials. Oils really got hit today. Here's junk bonds again, GDX, coal. Leading coal stock, CEX down 11%, BTU down 9.6%, Arch down 5.7%. Coal just absolutely taken behind the woodshed today. And solar stocks down again today. They're giving up their leadership position. Here's our focus list. We'll go over these tickers in a moment. What we did in-house today, FCX had a very short stint in our portfolios. Down today, we cut it loose. When you break support on the indexes and you break a key level, you look to your portfolio, you see what's the most recent thing that came in, you rank your stocks. You just bought something and you're underwater on it. why sit through it? We cut it, a loss of 0.06% to the overall portfolio. And we bought SDS when we started to break down as a hedge against the Dow, dropping our beta from basically in half to 0.15 or 15% of the overall versus the S&P 500. So bottom line, S&P 3800 breaks support finally. QQQ at closing lows. Not a good thing to come out of today's session at all. Next big level down is the 200-week moving average at 3668 on the S&P 500. So let's go to the focus list now. We'll start off with what we own in-house. Here's Boeing. Continues to hold up above the 21. We've shrunk this from a 6% position to a 1.5% position. Mobileye bounced off the 21 day today, first touch of the 21 in about 4 weeks. Did close below the 8. We've got a 1% size on this. TMDX is riding the 21, but the 21 is now rolling over. So that bounce that we got off the 50-day moving average, we're just about break even on this. We're not going to give it much room. NUGT slightly negative on this now. After yesterday's nice day, gave up pretty much all of it. And FCX, you'll see the break below the 21. And the 21 starting to roll over. So the relative strength that has shown on this recently, and the break of the downtrend line, and the break above the 21 and the 8 gave them all back today. Took about a 2.5% loss on a 2% position, maybe a 3% loss. It was 0.6 net to the portfolio. What's left? Okay, a couple new names. From our morning call, the fellas brought out Tractor Supply. See, this is kind of what FCX should have done today. Here's your downtrend line, broke it, still acting well. Nice relative strength, much stronger relative strength than FCS. So Tractor Supply holding up pretty well. Let's revisit Cat and Deer from yesterday. Here's Cat. Broke back below that 140 level, so failed breakout of 140, did bounce at the 80 EMA. Here's John Deere. It's not quite as strong. Cousin broke the 21 today. You're starting to see several stocks either sitting right on the 21 or a couple of percent below it. That's another sign to avoid. PCAR broke the 50, so not really a leader anymore. Toro holding up well. Attempted a new high and reverse. This is what happens in bear markets. Strength gets sold. Relative strength is good on it, though. SMCI still struggling. Early move above the 21 failed, sitting on the 50-day moving average. RXDX, big gap, still holding the 8. You know my gap rules. 5 broke. Let's look at 5 quickly. This broke the 8, broke the 21, stopped us out. It's reclaimed the 8. Relative strength over the last week and a half, but I'm not about to get back into it with the market the way that it is. Let's see, O'Reilly. Definite relative strength. This is defensive growth, plain and simple. This is where money managers hide their money when they're trying to get some growth with limited downside. Schwab also has been acting pretty well. SCHW, definitely holding up well, relative strength there. Remember when IBKR in this, where we were going back and forth for which one was stronger? Well, it's very clear which one came to the fore, and that is Schwab. Speaking of fore, here's Shift 4 payments consolidating nicely above the 8, definitely showing relative strength. Here's Crocs. Tried to break out inside day today, still showing relative strength and holding the 100 level. And finally, MDGL, this is that big biotech gap, finished positive on this day. 80 MA is starting to catch up to price after this 200% move up on 1219 on 1,668% above average volume. And that's going to wrap it. Remember, folks, it's not how much you make in the market, it's how much you keep. I think that today was more than a shot across the bow. Closing lows, break of support, junk bonds break down. VIX at a bounce area, dollar re-exhibiting strength. These are not good signs for the market. Uh, we take our cues from what's going on in the market, and that's why we reduced our exposure in half today down to adjusted beta of 0.15%. So that's going to wrap it. As always, we welcome your feedback, Don at revereasset.com. And for God's sake, if you watch this video on YouTube and you click that you don't like it, but don't tell us why you don't like it, how are we supposed to ever improve the video or address a concern? So if you're just clicking don't like it to be a troll and you're not going to fess up, well, just GFY then. As I said, email Don at revereasset.com. Love your feedback. Give it to us. We're open and honest. We deserve for you to be also. Phone is 855 Real Wealth. That's 855 732 5932. So wrapping up Wednesday, 12/28. This was day 3 of the ha. It's really ha ha ha, not ho 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 on the Santa Claus rally after today's action. 2 trading days left in 2022. The first 2 trading days in 2023 are historically very bullish. Well, we'll have to see about that, won't we? So wrapping up Wednesday, 12/28. It's Don Vandenbord telling it like it is. Thanks for listening and have a great day.